Top of the morning, friends and fellow traders. This is Doug Campbell with Right Way Options, coming to you with the morning market preparation video for June 5th, 2018. Well, we had a really impressive show of force by the bulls yesterday, a nice push and follow through yesterday. Now there are some things of just a little bit of concern here. Nothing of major concern here. Let's take a look at the Qs. Now the Qs made an all-time record high close yesterday. Not a new all-time record high print, but an all new record high close, eking that out, showing an impressive amount of strength as stocks like Amazon, Nvidia, Microsoft all reached up there for brand new highs for the day. Just an impressive show of strength in the tech sector. And then IWM also reaching out for those new record high prints at the close of the day, showing some impressive strength in those two indexes. The problem comes in when we take a look at the SPY and the diamonds. SPY actually broke above its resistance area here. That's a very big positive. But let's notice the S&P 500 is still lagging way behind those other two indexes and providing just kind of a big weight, a boat anchor, if you will, that the other two indexes are having to lift. That doesn't mean that we can't continue to stay positive. It's just a reason for a little bit of worry, a little bit of caution, because we still have an awful lot of work here to do before we can really sound the all clear sign. However, I have to say the bulls produced a very impressive showing yesterday, and holding above this resistance area would be a great thing. As of right now, the market is showing a modest positive open this morning, and a little push higher, a little follow through here today, and a hold up here would be a very good sign, I think, for the SPY. And maybe even an attack of these upper levels could be possible here over the next couple weeks if we can hold above that new level of support. Now remember, a support is not a support until it's been tested, and so far, popping through is not a test of support. It's a break of resistance. Test of support will be any kind of a pullback or consolidation that holds above that level, that proves that it can hold in that area. So we'll have to watch that. Also, let's take a look at the diamonds. Now the diamonds is lagging behind the most. The diamonds still below this 25,000 big round number here, and still locked in this consolidation right through this area here. So struggling a little bit here. As a matter of fact, if we look at a short-term chart of the diamonds yesterday, here's a 15-minute chart of the diamonds. After the gap up, you can see the diamonds really went nowhere after the gap up. There just wasn't follow-through energy in the diamonds like we saw in the SPY. So kind of an interesting situation to see the diamonds and the SPY so out of sync with the rest of the markets, but remaining bullish. So kind of keep an eye on that. Let's take a look at the VIX. The VIX pulling back once again yesterday, pulling down toward this long-term downtrend line here that could serve as support, and also we've got a little price support right in here. So any more pullback in here to test this level, we'll want to watch that closely for a potential of a bounce. Right now, fear seems to be diminishing in the market, even though we do have to remain a little bit concerned about trade negotiations and things like that. We all know from recent experience that just one tweet or ill-timed comment from some political type out there on the trade negotiations could unsettle the market and create some jitters. So we have to stay on our toes. This isn't the kind of market where we can just really relax. We really need to stay on our toes and be ready to respond. And that means having a plan in place to protect your profits, to protect yourself in the market. Please don't allow greed. And it's very, very common when we finally see a bullish market to want to maximize those profits as much as possible. And when we do that, we often allow greed to push into our decision making. Remember, they can't take that money away from you if you put it in the bank. So be real careful to manage those profits. Don't let greed get in the way of making those profitable decisions, because there is still some uncertainty in this market. And remember, most of that is political uncertainty. Economy-wise, we're looking great. Let's take a quick look at T21. 22 T21 22, the 4-week new high, new low ratio, plotted on just a simple line graph, and you can see we're moving back up toward that bearish reversal zone. Nothing to be worried about just yet. We still have plenty of room to be able to move up. So if those bulls can continue to hold this up and push it higher, we do have room here before we would really be worried of serious profit taking or a pullback. But we do want to keep an eye on that as we continue to push up. That profit taking could come in at any time. Also realize that we have plenty of room to the downside. So we could move lower if those profit takers do decide to come in. So be prepared to protect those profits, protect yourself in this market, because we're reaching up there toward that upper level. Again, I want to repeat this because I'm not suggesting bearishness. We could still see more upside here, and that's what I'm hoping for in the market, that we see those bulls maintain that strength and push just a little bit further in the market, holding things up and improving the confidence of the market. That's what I want to see, but I certainly am going to be prepared in case that doesn't occur. Okay, let's take a quick look at the economic calendar. The economic calendar only has a couple real things to focus on today. We have the Red Book and PMI services this morning. They're not expected to move the market, nor is this 4-week bill auction. But we do have the ISM non-manufacturing number. Now that's expected to stay very, very strong today and actually show a little acceleration and improvement after the pullback that it experienced last month. And then the jobs report, job openings report, is expected to stay very, very strong and competing with those all-time highs that we've seen here recently. Over 6 million jobs out there open, waiting for qualified people to fill them. So the jobs numbers continue to look really, really strong and very favorable for the market. So that's what's on the calendar there. On the earnings calendar, we had 34, 35 companies reporting earnings today. You'll want to stay on your toes with those earnings and make sure that you're making it part of your daily preparation, that you're checking all of your trades against earnings when they're going to report. If you're holding a position, check it against the earnings report. Make sure that you know when that is and have a plan prepared around that. Also be checking those earnings report dates on any companies you're thinking of purchasing. So folks, with that, we have a nice bullish market. Things are looking very, very good here. We do have a little tiny concern, just that the diamonds in the SPY are lagging well behind the NASDAQ and the small caps. But having said that, overall, our economy looks good. Everything is humming along pretty darn well. So barring a little bit of political uncertainty, we have a nice bullish market. So stay with your trades. Look at those. There's lots and lots of good charts out there right now. So stay focused to that. Make sure you're managing that risk carefully, and be very, very focused on price action, because it's in that price action that we will find clues of reversal or pullback sooner than anything else. Indicators will always lag. Look at that price action of a chart. That will help you identify those critical areas sooner than anything. One thing we do have to pay attention to here on the Dow is this resistance level. This 25,000 level has proved to be pretty darn solid, kind of a pesky level. And as we approach that, a failure up here would not be good for us. So as we approach that, a consolidation in here would not be out of the question. And also, if you take a look at the Qs, it would not be out of the question, even though we rallied very strongly. Just taking a look at the overall trend here, it would not be out of the question to see some kind of a pullback toward the trend or a consolidation over toward that trend. So we've got a lot of work yet to do here. And with the uncertainty out there on the political side in trade, there could be, some shockwaves still to come in the market. So just have a plan, protect yourself, watch this market very closely for shifts in the tide. Everyone, I want to wish you all a fantastic day. I want to wish you great profits. It's fun to have a bullish market. It's fun to see these profits rolling in the way they are right now. And I want to wish everyone just great profits as you continue to trade this market. Everyone, have a great day, and I will talk to you all very, very soon, bright and early Wednesday morning. Take care, everyone.